Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourselves, Banking and General Knowledge, etc. Today I will discuss some potential overseas posting examination questions and the corresponding sample answers for bankers. Today marks part 20 of my Path to the Corner Office series for overseas posting examination questions and the corresponding sample answers for bankers. An NBFC wants to raise ECB for on lending to its clients for working capital purposes. What is the applicable MAMP for such ECB? The options are option A 1 year, B 3 years, C 7 years, D 10 years. The answer is option D 10 years. The company raises FCY ECB in the all-in cost ceiling for new ECB, not LIBOR linked agents legacy is A benchmark rate plus 450 bps, B benchmark rate plus 500 bps, C benchmark rate plus 550 bps, D benchmark rate plus 300 bps. The answer is option B benchmark rate plus 500 bps. Under the ECB framework, prepayment charges and penal interest for default or breach of covenants are A. Included within the all-in cost ceiling of 500 bps. B. Not permitted under all ECB guidelines. C. Capped at 2% over and over the above the contracted rate of interest and are outside the all-in cost ceiling. D. Capped at 1% over the contracted rate and are within the all-in cost ceiling. The answer is option C. Capped at 2% over and above the contracted rate of interest and are outside the all-in cost ceiling. A borrower raises FCY ECB and wants to park the proceeds abroad temporarily pending utilization for foreign currency expenditure. In which of the following can the ECB proceeds not be parked? A. Term deposits with bank rated AA minus by Standard and Poor. B. Treasury bills of 1 year maturity with AA minus rating. C. Deposits with foreign branches of Indian banks. D. Listed equity shares of overseas blue chip companies. The answer is option D. Listed equity shares of overseas blue chip companies. The ECB framework specifically prohibits Indian banks from issuing any type of guarantee related to ECB. Which of the following is the only exception to this prohibition? A. Guarantees for ECB raised by Maharatna PSUs. B. Guarantees for ECB raised by infrastructure sector companies. C. There is no exception. No guarantee by Indian banks is permitted in any case. D. Guarantees for startups raising ECB under the special ECB framework for startups. The answer is option C. There is no exception. No guarantee by Indian banks is permitted in any case. The ECB liability to equity ratio for FCY ECB raised from a direct foreign equity holder under the automatic route cannot exceed 7:1. This restriction does not apply when A. The ECB is raised for working capital purposes. B. The ECB is from a multilateral financial institution. C. The outstanding ECB, including the proposed, is up to USD 5 million for its equivalent. D. The ECB has a MAMT exceeding 5 years. The answer is option C. The outstanding ECB, including the proposed, is up to USD 5 million or its equivalent. For conversion of full ECB into equity, which reporting action is required with respect to subsequent ECB2 returns? A. ECB2 returns must continue to be filed until the original maturity of the ECB. B. One final ECB2 return must be filed with remarks ECB fully converted to equity. Subsequent filing is not required. C. ECB2 returns continue monthly as before. Form FCGPR as is an additional requirement. D. No reporting is required as the ECB ceases to exist upon conversion to equity. The answer is option B. One final ECB2 return must be filed with remarks ECB fully converted to equity. Subsequent filing is not required. Public sector oil marketing companies OMCs have a special dispensation for raising ECB? What is the overall ceiling for such ECB? A. USD 5 billion or equivalent. B. USD 7.5 billion or equivalent. C. USD 10 billion or equivalent. D. USD 15 billion or equivalent. The answer is option C. USD 10 billion or equivalent. A startup recognized by the central government raises ECB. What is the maximum amount it can raise per financial year under the startup ECB framework? A. USD 1 million or equivalent. B. USD 3 million or equivalent. C. USD 5 million or equivalent. D. USD 10 million or equivalent. The answer is option B. USD 3 million or equivalent. Under the Trade Credit (TC) framework, what is the maximum permissible period for trade credit for import of non-capital goods other than shipyards? A. 3 years from the date of shipment. B. 2 years or operating cycle, whichever is less. C. 1 year or operating cycle, whichever is less. D. 6 months from the date of shipment, regardless of the operating cycle. The answer is option C. 1 year or operating cycle, whichever is less. A shipping company wants to raise trade credit for import. What is the automatic route per transaction limit applicable? A. USD 50 million. B. USD 100 million. C. USD 150 million. D. USD 200 million. The answer is option C. USD 150 million. Under the trade credits framework, the all-in-one cost ceiling for FCY denominated trade credits is A. Benchmark rate plus 450 bps. B. Benchmark rate plus 300 bps. C. Benchmark rate plus 550 bps. D. Benchmark rate plus 250 bps. The answer is option B. Benchmark rate plus 300 bps. Under the Trade Credits Reporting Framework, AD Category 1 banks must furnish a consolidated monthly statement of TC transactions Form TC to RBI's DEPR within A. 7 working days from close of month, B. 7th of the following month, C. 10th of the following month, D. 15th of the following month. The answer is option C. 10th of the following month. Under the Credit Enhancement Facility for Domestic Debt Instruments, the guarantee fee of other costs are restricted to a maximum of option A 1% of principal amount, B 2% of principal amount, C 3% of principal amount, D 5% of principal amount. The answer is option B 2% of principal amount. EDPMS was introduced by RBI for monitoring export of goods and software. The system became operational from A. January 1st, 2013, B. March 1, 2014, C. October 10, 2016, D. April 1, 2015. The answer is option B. March 1, 2014. An exporter ships goods on March 5, 2024. The goods were exported to a warehouse established outside India. By when must the proceeds be realized? Option A. December 5, 2024, 9 months from export. B. March 5, 2025, 12 months from export. C. June 5, 2025, 15 months from the date of shipment. C. September 5, 2025, 18 months from export. The answer is option C. June 5, 2025, 15 months from the date of shipment. IDPMS was introduced by RBI on October 10, 2016 for monitoring import payments. Under IDPMS, which of the following is the correct statement regarding settlement? A. Each BOE must be settled against exactly one ORM and each ORM against one BOE. B. Multiple ORMs can be settled against a single BOE and multiple BOEs can be settled against one ORM. C. Only EDI port BOEs can be uploaded. No, non-EDI ports are not covered under IDPMS. D. BOE data from all ports, EDI and non-EDI, is automatically tagged to the AD bank by customs. The answer is option B. Multiple ORMs can be settled against a single BOE and multiple BOEs can be settled against one ORM. For recommending an exporter's name to the regional office of the Foreign Exchange Department for caution listing the AD branch's recommendations must first go through A. RBI's Export Facilitation Department directly. B. The Enforcement Directorate, which has sole authority to recommend caution listing. C. The Zonal Office of the AD branch concerned. D. The Ministry of Commerce through DGFT. The answer is option C. The Zonal Office of the AD branch concerned. Under the Foreign Investment in India framework, a convertible note issued by an Indian startup can be converted to equity or repaid within how many years from the date of issue at the option of the holder? Option A 2 years, B 3 years, C 5 years, D 7 years. The answer is option C 5 years. Under the NDI rules, foreign direct investment (FDI) is defined as investment in 10% or more of the post-issue paid-up equity capital on a fully diluted basis of a listed Indian company. If an existing FDI holding falls below 10%, what happens to its classification? A. It is reclassified as foreign portfolio investment automatically. B. It continues to be treated as FDI. C. It must be converted to FPI within 5 trading days. D. It is treated as non-repatriable investment from that date onwards. The answer is option B. It continues to be treated as FDI. Under the NDI rules, which of the following instruments is classified as a non-debt instrument? A. Non-convertible debentures. B. Fully and compulsorily convertible debentures. C. Optionally convertible preference shares where funds were received after April 30th, 2007. D. External commercial borrowings in foreign currency. The answer is option B. Fully and compulsorily convertible debentures. A person resident outside India, not NRI or OCI, wants to make a gift of equity shares of an Indian company to another NRI. This requires A. No approval since gifts between non-residents are freely permitted. B. Prior approval of RBI subject to conditions including gift not exceeding 5% of paid-up capital and value not exceeding USD 50,000 in a financial year. C. Approval of SEBI since equity shares of Indian companies are involved. D. Prior approval of the investee company's board of directors. The answer is option B, prior approval of RBI, subject to conditions including the gift not exceeding 5% of paid up capital and value not exceeding USD 50,000 in a financial year. Under the FDI framework, aggregate foreign portfolio investment up to what percentage of a paid up capital fully diluted does not require government approval, provided there is no transfer of ownership or control of the Indian company to persons resident outside India? A 24%, B 26%, C 49%, D 74%. The answer is option C 49%. Under NDI rules, for a partly paid share issued to a person resident outside India, what minimum percentage of total consideration, including share premium, must be received upfront? A 10%, B 15%, D C 20%, D 25%. The answer is D 25%. Under FDI rules, investment in which of the following does not constitute a prohibited sector? A. Chit funds, B. Nidhi companies, C. Real estate investment trusts, REITs, regulated by SEBI, D. Online lottery business. The answer is option C. Real estate investment trusts, REITs, regulated by SEBI. Which of the following structures violates the ODI restriction on layers of subsidiaries? A. Indian entity, foreign entity to step down subsidiary. B. Indian entity, foreign entity to SDS 1 to SDS 2. C. Indian entity to foreign entity 1 plus foreign entity 2 separate investments, each one with SDS. D. Indian entity to foreign entity with 3 co-investors from India, none having control. The answer is option B, Indian entity to foreign entity to SDS 1 to SDS 2. An Indian entity makes ODI in a foreign entity and subsequently decides to close its foreign currency account maintained abroad for the purpose of making that ODI after disinvestment from the foreign entity. Within how many days must the FCA be closed? A. 15 days from date of disinvestment. B. 30 days from the date of disinvestment or cessation. C. 60 days from the date of disinvestment. D. 90 days from the date of disinvestment. The answer is option B, 30 days from the date of disinvestment or cessation. Under the ECP framework for startups, which of the following entities is specifically excluded from being a recognized lender? A. A bank located in a FATF compliant country. B. A foreign equity holder of the Indian startup company. C. A foreign branch of an Indian bank. D. An overseas investor from a FATF compliant jurisdiction. The answer is option C. A foreign branch of an Indian bank. An Indian entity under investigation by the Directorate of Enforcement desires to make ODI in a new foreign entity. The investigation is pending adjudication. The entity should A. Wait for the investigation to conclude before making any financial commitment. B. Obtain NOC from the DOE before approaching any AD bank for remittance. C. Obtain NOC from the AD bank since the bank is the primary authority for overseas investments. D. Obtain NOC from the lending bank or investigating agency before making financial commitment. If no response within 60 days, it is deemed granted. The answer is option D. Obtain NOC from the lending bank or investigating agency before making financial commitment. If no response within 60 days, it is deemed granted. Under TRRA ACS used in the context of EDPMS or IDPMS, data flows from the bank's core banking system to the TRRA ACS application on what basis? A. Real time, same day basis. B. T plus 1 basis. C. T plus 2 basis. D. Weekly batch processing basis. The answer is option B. T plus 1 basis. Thank you very much for your patience. Please like and share this video and subscribe to my YouTube channel.